Good morning, traders, and welcome to our new Jackrabbit Club video. It is Saturday, September 2nd, 7:18 p.m., so you'll be getting this on Sunday morning. But we just continue to churn and churn and churn, and the portfolio keeps grinding its way higher. And this week, again, another example of just being patient with the process and kind of making sure you're not scared out by headlines, making sure you understand fully what you're doing, why you're doing it, when you need to do it, and it just continues to work. I can't say it any other way. The trading that we've done here is the simplest trading I've ever come across in my entire 15 years of trading, and it honestly is some of the most profitable. I don't know any other way to say it. It just continues to work. I continue to try trading the daily chart. I continue to try generating some other kind of income, more on like a monthly basis. Doesn't work. None of it works. It really comes down to, and trust me, when I figure it out, I'll tell you. But it comes down to longer term profits, longer term gains, and you can see we're sitting at a 16.69% gain for the year. S&P, I think, is right around 10%, 10 point whatever, 08, 05. And that kind of outperformance based on trading on one single day a week, or finding maybe 1 hour a week, it's amazing. It really just proves that you don't have to sit in front of a computer screen your entire life to be successful in doing this. So we did have some closed trades last week. Again, I know I didn't put a video out, but I definitely sent you an email saying what we were doing. So we had some closed trades that I've updated. WIN, DHR, those were closed out. And we also added some new ones. So let's get into what we have in the portfolio. And you can see our top performer still at 35%. United Health, I did take half of that profit off, and it just laughed at me as it continued higher. But again, this is where you need to develop your processes, where for me it's so important taking half off when I feel I need to. It just keeps me in the trades longer. It's not like I'm feeling like the entire position is gonna go to shit. It's just a way for me to manage my risk, and it makes me much more comfortable in the markets. So UNH still up there. Netflix up almost 19%. Microsoft 17%. Rockwell Collins still waiting to see if we're going to get that takeover. But there was a pop on some news this week, and sure enough sold off. But it did trade as high as 135. So again, if you're nimble and you're in the market and you get that kind of news, you may want to take some off. There's talk maybe that there's going to be a deal with United Technologies soon. Maybe at 140 a share. But the problem is, if that deal doesn't come through, Rockwell Collins could be down 10-15% in one day. So again, this might be an opportunity where we just kind of let it play out and just accept what happens, or you want to take half off, reduce your position, and play that lottery ticket for a takeover, then you can do that too. But you have to be comfortable with either decision that you make. And then just go down the list. Raytheon up 14.5%. Berkshire Hathaway up 10. Best Buy 7, and that was 7 after, you'll see what happened to it this week, because I think it was down 12% on one day after earnings. And go all the way down to the list, and what do we have? We have 4 losers: Tesla and CenterPoint Energy. Oh, I'm sorry, so 2 losers. I have multiple accounts, and there you go. It's a total of, I don't want to view the trades. Anyway. There we go. It's a loss of $41. That's it. $41. So again, just let them run. Keep those losers. Manage the losers, right? You want to always manage the losers. You don't want a loser to get too big, and then everything else takes care of itself. So let's take a look at the charts. Hopefully you guys caught the stocks to watch list. I think there's some good ones out there, a lot of healthcare names. And let's take a look at what we got. Getting there. There we go. All right. So, Agilent Technologies, healthcare, ticker symbol A. We bought this one last week. I sent out an email, and you guys bought it at the same time I did. I bought it at 10 or 63.10 a share, which was pretty much the open for this week. You could actually see, if you look up in this area right here, as I hover over the bar, I'm not front running you. 63.10. All right, that's where we got in. And basically the idea was a very simple breakout along an uptrend line. We wanted some healthcare exposure. We put it on, and we're just going to let it go and manage it. Stop right now, right around 59. AVGO, all right, has just continued to go sideways for what feels like forever. Got in that trade right here in the beginning of May, and it has since just really gone sideways. But here we are hitting that uptrend line once again. Maybe we could look at this, depending on if we can get a breakout, we can look at this as a smaller consolidation, right? So we can look at it more in those terms. So breakout there, potentially trail stop to 243, and potentially add to it. Berkshire B had this huge move on the end of July, and then sure enough we gapped down, but it's just grinded its way back higher. So this is one that I want to look to maybe take some off, because you could see I have a well oversized position. I think this is actually my biggest position besides A in my portfolios, but I do want to look to take some off. So I'll be watching these lows here. If we have a low taken out, I'm probably going to take half the position off and let the other half run, just because of how big it is. Rockwell Collins, again, got in. There was some takeover talk, takeover chatter. Now we're trading all the way up here at 130. It went all the way to 135. And, this is, again, you just got to kind of be mindful of what kind of situation you're in, because if you don't get that takeover, this thing's going to fall on its face. All right, so this is one where I'm starting to think the risk outweighs the idea of the takeover, because they're saying 140 a share is the takeover price if it gets taken over, or at least that's what's been discussed. Obviously that's not set in stone, but knowing that, I wish I would have taken half off at 135, but I didn't. But here I am at 130 saying, okay, well, I can pick up $10 more a share, so another $300, or I could give back potentially $18. And again, that's where you got to watch the risk. Where does the risk outweigh the reward? And so Rockwell Collins is starting to get into that situation. Microsoft, all right, Microsoft, I thought we were going to have a breakout. Sure enough, it's pulled back. I really want to move my stop up here to 71.20, but for right now, I'm just going to keep it where it is, see what happens, see how it plays out, and just be patient with it. Red Hat, another one that we added last week in that email, and again has just continued its move higher. That again, a simple breakout out of a consolidation along an uptrend, find a nice low in here, 95, let's call it 95, and we just let it work. RTN, this is one that I've been trailing my stops to previous lows on half of my position. Again, a larger size position for me, but when you start to get these runs where every single week it's higher and higher and higher, it's almost like it's giving you a gift, and you have to take something off, because when it reverses, it could reverse, and it could reverse, and it could reverse. Doesn't always happen that way, and that's what happens in UNH. I took half that position off on the close below the previous low. It laughed at me and is now trading almost up at 200. So in this situation, I'm going to take my stop, and I'm going to actually put it at these lows right here. So here we are, uptrends in place. I'm looking at this 4 or 5 week pattern as a new consolidation. All right, we have the breakout. I'm definitely not adding to the position up here. It's way too extended for me. But here we are. 5 weeks of sideways, new breakout. What do? We trail stop higher. All right, so this stop goes away. Trail stop higher, and normally we would add to the position, but I'm not adding to this one. All right. Other account. All right. BBY. Not the best. All right. Had earnings, came all the way back down, held support at 53. This could turn into another Corning, GLW. All right, where we have this huge move lower, we try and hold, and then it just breaks down again. So very easily could turn into that situation, but we'll see what happens. For right now, stop is still at $53, and we'll stay there. CNP just continues to move sideways. This looks like maybe a topping tail. As I said, utilities were the underperformer of the week, so something there that just to keep it in mind. All right, so you have a nice big dividend yield, 3.61. You may not get much in terms of price action, but this is one. I have the wrong. There we go. That we entered, and we're closed lower on it so far. CRM. All right, again, moving higher after a consolidation along an uptrend. We found the low. It's rinse and repeat. All right. Every single one that we entered last week that was in that email, CRM, CMP, and Red Hat, they were all the exact same setups. All right. So that's the setup I like. That's what I look for, and that's what I'm comfortable with. Other people, as I said, the FedEx, the Amazon, the Netflix that we talked about in the stocks to watch video on pullbacks. Other people may be comfortable with pullbacks. I'm not. I see them, I can identify them, but I just don't like them. That's just me. It doesn't mean it's wrong. So here DHI, this could very well be a pullback to trend line. You can see it tried to close below this 35.47 area twice. Both times it recouped. So let's see if we can get some upward momentum here. I would love to see a breakout over 37, move stop up 35.44, and add to that position. EA has really done nothing since we've entered. There's nothing else to do here. You just move on and see what happens. FedEx. All right, FedEx, what I am going to do is I am going to move my stop up. All right, because remember, I will move my stops to what look like pullback lows. All right, but I will never add to those positions. That's just how I trade. I won't take a position on it, and I won't add to a position. All right, so I always add to the position based on what I like to look at to get into a position. For me, that's breakouts along an uptrend. All right, that's what I like to add with. But seeing that this looks like a pretty well-defined pullback, I will move that stop up to 204, and if we can get a move over, say 220, then maybe look to add to that position. But for right now, I just stay in it. HIG, we took half off last week on the same premise that it finally broke below a previous week's low, and sure enough continued lower. Who knows how low this goes? Does it come all the way back to trend line? Maybe. Does it reverse and go higher? Maybe. But all I know now is this is gone, and now I just let it wait and tell me where the new low is. If this happens to reverse this week and say closes at 55, puts in a nice big green candle, then move the stop up, just like we did in FedEx, to what looks like a pullback low. ICE, sideways. All right, not much else to do there, sideways. JPM, sideways. All right, we got in, and what's it done? Sideways, not much. Netflix, similar to FedEx. What are we doing? Oh, that's not what I want to do. Right, we're gonna move it to, we don't want purple. We're gonna move it to pullback low. Again, I'm not adding to it. Took half off up here, which was a smart move. Here we are. Obviously, I could add that half back on right now and see what we get, but that's not how I trade. It's not my style. So just stay true to what you find works and what you feel comfortable with. As you progress, I'm giving you my style, my progress, my process. I was never this comfortable just managing trades, and it's just something that you just need to do it over and over and over and over and practice and practice and practice. And then you just develop a nice little cheat sheet for you. I have it in my head, but say, okay, pullback. What do I do? Well, I trail stop at pullbacks. Breakout, what do I do? Well, it depends. Am I in the position or am I not in the position? If I'm in the position, I'm adding to the trade and I'm moving my stop. If I'm not in the position, I'm setting my stop, calculating my position size, entering the trade. Those are my rules. Done. Move on. All right. Tesla traded lower. Now looks like maybe consolidation, but all within a bigger box. Remember, this is a pullback trade that I took, right? Not my style, but I took the pullback just because of what it was. Maybe I'm wrong, maybe I'm not, but I made an exception with Tesla because it was Tesla, and I've never traded Tesla. I felt like I wanted to get in it, but sometimes pullback trades don't work out, and sure enough, here is Disney. Because remember, we did talk about Disney on a pullback right around that same exact time. All right, and look at what it's done, straight down. So instead of it being a pullback, it's actually turned into, now what's happening is it's a downtrend. And if we look at this from a weekly perspective and we clear, and this is a good illustration, I would say, is now what's happened is we had originally, and this is, again, I'm not saying pullbacks are bad, I'm not saying breakouts are always work, I'm not saying anything. I'm just pointing out that we had looked at trading Disney. All right, we had what we were considering a pullback. All right, so it hit resistance, pulled back, broke out higher. All right, so we could have easily said, okay, there's the pullback. Here's the trend line that's established. And there's the breakout. All right, but instead what happened was it actually became a lower high, because now we've broken that consolidation, and instead of the trend line being like that, the trend line is really like this. And maybe we're going to test down here at 98. Maybe we're going to test support at 90. I'll tell you what, if it gets to 90, I think it's a screaming buy, just based on this huge resistance or a support level. All right, that was one that I actually took advantage of. And the difference here, in my opinion, and it may be wrong, is the difference here is I was looking at this as a reversal. Okay, so here was my trade in Disney originally. You had this reversal, you had it break this downtrend line, and you were using $90 as a huge support level. All right, so that's why I felt more confident taking that trade, and we rode that trade, I think, till, I don't know if it was 112 or 110. We have to look at the chart. But here again with Disney, just always understand there's always two sides to it. So while FedEx looks like, hey, you know what, maybe this is a reversal, very well could be. While Netflix looks like, hey, this is a reversal, and it very well could be. It could also be the start of a downtrend. All right, Amazon. But the difference here too is pay attention to the established trend lines that are already in place. All right, where this stock is actually coming into. Amazon's bouncing off an established trend line. FedEx is pretty close to an established trend line. What was the other one? Netflix. Pretty close to an established trend line, right? Tesla. Pretty close to an established trend line, right? 1, 2, and that was our breakout. So you already had 2 points. That made your third. And that's one of the reasons we got in it. So, just have rules. That's really the moral of this. Because we've already had a couple, points that have been established, I think it makes it a lot easier to take those pullback trades like I showed you in Amazon, Netflix, and and FedEx. So if you wanted to take those and you're not in them already, I think you could put that position on with a little bit more confidence that you're using an established trend line already. Whereas the Disney one, it would have been establishing the trend line because it was only 2 points, right? There was no third point that basically said, hey, this is definitely the trend line. You see, there's no intermediate point like over here that I could snap and just say, oh, it happens to be that's where it's bouncing from. So That's why pullbacks are a little bit trickier. You just got to kind of understand if you're imagining that it's really a pullback or if it's that it's really a pullback. So I just keep them out of my little toolbox there. Like I said, I took an exception with Tesla. So I've rambled for a little bit. I apologize. I think we're done. Have a great rest of the weekend. Any questions, comments, let me know. I'm not adding any new positions today. I'm not adding to any existing positions. Just manage those few stops. And like I said, there's a lot of healthcare names out there. So if you guys aren't in some of the healthcare names, you could definitely look at those. All right. Again, apologize for rambling. But have a great rest of the weekend. We'll catch you next week. Take care.